We are officially in the last quarter of 2024. So what does that mean? Well, I can tell you what that means. It means that we're going to start to see some more information, some more data for earlier in this year. And in this market update video, we are going to be breaking down that data for October of 2024. Overall, we're going to look at the amount of homes on the market. We're going to look at how many are under contract. We'll also see how prices change over the course of the year, especially in the last month or two. And we also are going to discuss how interest rates are playing a role in that and what we are going to start to expect for 2025. So when I come back, we're going to go over the market update report for the Jacksonville Beaches and the Jacksonville Southside area for October of 2024. All right, so we're going to go ahead and start off with our market update report for the Beaches and Southside area. So if you haven't seen our videos before, or if you have, then you know the deal. But if you haven't seen our videos before, please feel free to like this video, subscribe to our channel, and ring that bell so you get notified when we post more content like this in the future. The first thing that we always like to discuss with these market update reports is how many homes are on the market for any given month, in this case October, as well as how many of them were actually under contract. And here's what we saw. So we saw there was 101 sales pending for the month of October, compared to 500 homes still on the market. That's about 601 homes, overall in the market in October. This gave us a pendulous ratio, though, of 16.8%. So you may ask yourself, okay, is 16.8% good? Is that bad? Well, ultimately, what that percentage means, that means that we are in a somewhat slow market right now for the Beaches and Southside. Now, typically when you hit 20% or more for your pendulous ratio, it pretty much means that 1 of every 5 homes is going under contract. That's normally going to be considered more of a mildly active market. So to be under that is why it's still considered a somewhat slow market for the area. Now, when we take a closer look, though, at the homes that are on the market, we did see that the homes in the $800,000 to $1 million price range had the relatively largest amount of contracts pending. This can be for a lot of reasons, one of which could be just for the fact that sometimes at those higher price points, with rates where they're at right now, and the market conditions being, again, this time of year being a little bit slower due to seasonality trends, that those higher price points don't necessarily always have as much of a slowdown due to those seasonality trends the same way maybe the $200,000, $300,000, $400,000, $500,000, $600,000 price points do. A lot of times those lower price points, that I just mentioned, sometimes slow down because of the fact that school starts, in September, August, September, people start to take some time off of looking for a home. They have other things they're working on, such as getting their kids back in that school routine, getting back to work. And so ultimately, that's why sometimes you see that bit of a slowdown at those lower price points. But the $800,000 to $1 million, not as much because of that, because those price points, you don't see those seasonality trends slowing them down. Now, we also noticed that the homes in the $400,000 to $600,000 price range made the relatively large amount of homes, on the market. And that's because that is going to be your typical, price point for most homes in the area. So even though buyers have slowed down in that price point, it doesn't necessarily mean that sellers have slowed down per se. And they made about 133 of the total 601 listings on the market. Overall, though, the median list price for all homes in the market in the Beach and Southside area for October was $668,665, so call about $669. Overall, that's a really good number. It does show that buyers or sellers are still trying to get at a very high price point. It also might be telling us that there's less homes, at the lower price points in the market due to that. Ultimately, though, that's something that we love to monitor as we go into future months and see if that price point goes up or goes down. Because ultimately that price point, well, that doesn't always mean that's what it's selling for, it just means that's what sellers are trying to kind of get for their house. Then when we look at the graph, we see here, it measures the amount of homes for sale versus the amount of homes that are under contract. And what we can see here is that ultimately there are a lot more homes for sale from 200,000 to 800,000 than there are under contract. Like I mentioned, that can be because of these seasonality trends, with school starting, with rates still being high, but ultimately, as we go into the rest of this year, it'll be interesting to see if that gap widens or comes closer, because what that's going to tell us is it's going to tell us, are we seeing more supply in the market, or are we starting to see more demand on the market, especially if we do see some rate decreases, which we do expect to see, later on this year and beginning of next year. Then from there, we're going to look at ultimately how many homes closed in the last 6 months, which in this case was 846 homes that closed, with a median sold price of $580,000. So right now, the median sold price is about $100,000 less than that median list price. So the question may be, okay, does that mean that sellers are coming down massively in their price? It could be. It could also mean that sellers, that are getting contracts are sellers that are at a lower price currently. So ultimately, it does kind of tell us that even though these seasonality trends tend to cause slowdowns and sometimes price reductions, homes in that $5,000 to $6,000 price point may not necessarily be seeing that slowdown currently. The fact that is kind of that median sold price of $580,000. Now, when we do break it down further, we do notice that the homes in the $400,000 to $600,000 range, obviously, being the fact that the median list price is $580,000, did make up the highest amount of sold listings. So ultimately, it will be kind of interesting to monitor in future months. What happens with these, contracts between $800,000 to $1 million, that made it the most contracts pending for October. Do those close out? Do those cause that median sold price to come up some? That'll be interesting to see, because ultimately it also could mean that with less sales, maybe those won't close out, and we may actually see that median list or sold price come down some. So it'll be interesting to see overall. We did see 158 homes fail to sell in the last 6 months. Now, a home can fail to sell for multiple reasons. It could be because a seller wasn't getting the price they wanted. It could mean that the condition of the house didn't match what was needed to get that price for a seller. Could mean that the agent who was listing the house may not necessarily have done it as well as they could have. Ultimately, it could be many different things. It could be that the seller was looking to relocate and plans changed, now they're not. So ultimately, at 158, that's not anything that's jumping off the screen to me and saying, hey, we have a problem here. Because that is more in line with what we've seen in previous videos and previous market updates. So ultimately, just something to monitor, but nothing to be concerned about right now. Then from there, we are going to check out the days on market. So days on market play a pivotal role when you're trying to sell your house, because ultimately, when you're seeing a high days on market, it means that you're going to have a lot of exposure to the market. It means that you're also going to have to plan your timelines around that exposure time required. So for instance, if you're trying to buy and sell your house before the end of this year, for instance, we're sitting, the day this is being recorded, the first week of November, if your days on market are more than 30 days, more than 45 days, it may be tough to buy and sell your house, all within the end of this year. So what does that really mean? It means that if you did want to do it, you're gonna have to price your home more aggressively to get a buyer quicker, to get outside that typical market exposure time frame that we're seeing. With that being said, when we do look at the Beaches and Southside area, the days on market that we see for active homes on the market for October came in, median time frame around 66 days. So 66 days, that tells us that you're going to need a little over 2 months of market exposure to get your house sold, unless you price it very aggressively to get around that. It also means that if you price your home at a price point that might be at the top of the market, you may actually be higher than that 66 days. So here's a good point to keep in mind is that ultimately at 66 days, that median, that middle time frame doesn't always mean that that's what the standard's going to be. You're going to have some that could sell quicker if you maybe do a more fire sale price, multiple offer price mindset, or it could take longer in the market if you're going with top dollar price point that ultimately you could get, but you're not necessarily seeing that happen across the board currently in the area. Now, how does that compare to the homes that sold in the last 6 months? Well, homes that sold in the last 6 months took about 20 days on the market. So with 20 days on the market, what that tells us is that ultimately, if you are pricing your home more aggressively, not saying you have to fire sale it, but you are pricing it maybe a tad below that top end price point, or even that median list price, so to speak, that ultimately you potentially could get around that longer market exposure time frame required and get your home sold in a much quicker time frame. Which again, as an example, if you were trying to buy a home this year and sell your current home, you could definitely get all that done with a more aggressive price point. As we already knew, the median list or median sold price was around $580. But ultimately, let's see how that compares to the last 30 days. Because again, this is a 6-month window, so this is going to take into account May, June, July, August market data, which is typically going to be a little bit more positive because the summertime tends to be a very busy time for real estate, and the seasonality trends with it tend to be that we do see a lot of action and a lot of people buying, a lot of people selling, which even this year we did see a good bit of that. So when we look at the last 30 days though, what we see here is that we see the days on market was 27 days. So we saw an uptick of 7 days on the market, which is not unreasonable. And the median sold price was $537,000. So we saw a massive decrease in that median sold price when we're looking at a 6-month window to a 1-month window, because we went from 580 to 537. What that tells us is that sellers are understanding that the market is not what it used to be. Buyers are being more aggressive with their offers. And what does more aggressive mean? It means that, whereas we may have been seeing a lot of buyers coming in 97, 98, 99% of the seller's asking price, don't be surprised if you see buyers coming in more that 90, 91, 92% when they take into account the price plus concessions that they may be asking for. The definitely something to just keep in mind as we go into future months is that number kind of stay pretty stagnant? At 537, do we see that kind of stay around the same? Or do we see those prices decrease further, or maybe even increase with potentially some rate cuts, as well as December tending to be a very busy time on the market here in Jacksonville, with a lot of movement going on with buyers and sellers. Now, as far as days on market 27, that's staying pretty consistent for the most part. We'll be interested to see if that goes up or goes down in future months, but ultimately what that tells us is that people are still buying homes. They're just not going to buy them as quickly unless they're priced more appropriately for where they feel like it should be priced at. And ultimately, that's what market value kind of is determined by. It's what buyers want to buy a house for, and sellers want to sell their house for. Now, when we look at the median listed sales ratio for the area, we saw that it was 97.6%. So that's kind of showing that downward trend from previous videos. Ultimately, it is still meaning that sellers are still getting good numbers for their houses, but it does also take into account that you are going to be willing to come off your list price some, unless you're priced obviously very aggressively, to get a buyer to go under contract with you. So that could just mean agreeing to their reduction in price. It could mean that you might have to offer up some concessions to a buyer, maybe a rate buy down still. But ultimately, it just means that you have to be willing to negotiate now more than ever to get your home sold with the current market conditions. Then we look at the absorption rate, which the absorption rate is kind of the measure of how many homes are on the market, how long it would take for them to sell, if we saw no new homes hit the market. It's a good measure to kind of determine, are we in a buyer's market or a seller's market? And what we saw is that for the last 6 months, the absorption rate's coming in about 3.5 months of inventory. So 3.5 months of inventory, that pretty much tells us that we are slightly in a seller's market, but it's a little more equilibrium seller's market. So, yes, some houses could still see multiple offers, and some houses still could see, offers above asking price, but most of them are going to be either at or below asking price with some sort of concessions built in with the way that the market's kind of showing itself right now. And then lastly, we're going to look at the graph here below, which again is a measure of that absorption rate, but at different price points. So something to keep in mind when you're looking at this is if you're seeing reds for certain price points, that's telling you that it's still a very busy, very heavy seller's market, and that ultimately you may be able to negotiate on some of these houses, but you may have to also, if you're a buyer, may have to be willing to give the seller kind of what they're looking for to get under contract. On the flip side, if you're seeing yellows and greens, that's going to tell us that we're more and more of a buyer's market, which at higher price points, it tends to happen because there's going to be less buyers at those higher price points than at the lower price points. And so unless you have less sellers, which in this case we're not seeing, you're going to have more of a buyer's market, which means that you have that ability to negotiate, you have that ability to come off of their list price a good bit, get concessions. Really just depends on what you're looking for, what the seller's willing to agree to. But you do have more negotiability at those higher price points than maybe at the lower price points. So ultimately, the oranges do kind of lead us in that equilibrium kind of market that I was mentioning. And really with the oranges, it just tells us that, again, depending on the situation, it may be more advantageous for a buyer on a house and maybe more advantageous for a seller on a house, all depending on where they're listed at price-wise, what the condition's like, and what the location is like. So ultimately, when I look at this, the biggest thing I can pull away from this is that we are in a slowing down market. which is not unreasonable considering the time of year that this market update is referencing, which is October. But it does kind of tell me too that there are still homes selling and there are still buyers in the market. So if you're looking to sell, it's one of those things. Do keep in mind that there are still going to be people out there looking for your house. But what can you do to differentiate yours from the competition? Is that upgrading the inside of the house? Is that doing things that upgrades to make yours more attractive to buyers? Is that coming at a price point where a buyer almost couldn't say no to that price? It is a challenge because you want to maximize your price point, which means putting less money into the house when you're looking to sell, or coming in not coming in as low on your price. But if you're trying to get your home sold for top dollar as soon as possible, it could be advantageous for you to do some of those things to make it more attractive to a buyer. And if you're a buyer in today's market, you have options. Now, the quality of the options, that's always going to be the question mark. Just because there's 20 houses in the area you're looking in compared to maybe 5 a year ago, doesn't mean that all 20 are going to be good, but it gives you that ability to negotiate on a house, whether if it's price or condition, to get the best deal possible for you. Now, if you need help with any of these things, whether it's buying a house or selling a house, I'm always here to help, answer any questions. And so do keep in mind that in the description of this video is a link to my calendar where you can set up a time for us to meet face-to-face or through Zoom or even a phone call, which my phone number is also next to that link in the description, to be able to help answer any questions you have and help get you on the right path to either homeownership, whether if you're looking to buy for your first house, your next house, or an investment property, or if you're looking to sell and help determine what makes the most sense for you to get your home sold for top dollar for as soon as possible. Because in today's market, being on the market longer than that median time frame may not always be a good thing for you to be able to get that top dollar price. So I'd love to help answer any questions and help you through the process however I can. So definitely, like I said, reach out to me in the description below. And ultimately, if you like this video, don't forget to like it, subscribe to our channel, ring that bell, and definitely stay tuned because we'll be posting these every month. Whenever the new month starts, we'll have all of those great market update reports. So definitely stay tuned for our next ones, and I will see you again on our next market update video.